Hey folks, this is Caleb James DeLisle here. And I wanted to just do something a little different and talk about the markets. So start with Packet. We have 0.2 of a cent, 2.2 of a cent. And what you're seeing when you look at this chart is there is a lot of compression around this 2/2 point where it seems like the price just doesn't want to go any lower. And when you zoom out, you can see those kinds of compressions going over and over. So for me, this is actually, I mean, you would think that this is a negative, but for me, this is actually positive because I would expect to see a couple of more months of this just really making sure that this is the bottom and getting out the people out of the coin that want to get out. And then once all basically the dead weight has been trimmed, then the market can do its thing again. So another is I'm obviously always watching the Bitcoin price. Obviously we're in a bit of a bear market right now with 19,322, but you'll see my trend lines here, and if I zoom out, I was actually kind of expecting it to stay in this band up here, with also potentially touching this band and maybe down to the green line. So I recognize that, yeah, this is a log chart, so I'm basically saying it's between 100K and 10K. But I mean, I think 20K is a fight here around 2022, and then the other is going to be, there's a fight at 16K and then another fight at 10. I just don't see it being in the cards going below 10K. Obviously, not financial advice, and I've been wrong before, but I think that 10K is kind of where the Bitcoin, it's just, it's such a small market. And that's one of the things you have to understand. The same thing with Packet and with Bitcoin is that once the price gets down enough, then it takes so little to get it back up again the market cap gets small enough that it only takes a few buyers to accumulate, most all the coins. So if Bitcoin goes down to 10K, you think about what does that do to the market cap? And if you have just like say El Salvador and like 2 African countries who want to continue to buy, like they can hold Bitcoin at 10K and it's just not going to go below that. So I think that Bitcoin, I said 10K a lot. If I were in the market to buy right now, I'd probably be putting my orders at 16, right in the middle there. And just to give you some perspective on what this chart is, the age of this chart, you can see that I actually made this chart in around 2017, as you can see where all these lines are. And I started it back a bottom in 2013 and 2014. So this is a very old chart. Now, granted, there are things about technicals that will not hold true. For example, if there's a war or there's an economic collapse, those kinds of things are, obviously you can't predict them in the technicals. However, what's surprising is that technicals are better at predicting things than you would expect. And that's a little bit weird that like you have something like, for example, right here, this was the this drop here, I believe, was the time of the Bitfinex hack, one of the major Bitfinex coin thefts. And it dropped and then it went down to this line and started running on this line. But the chart kind of expected that. It was overvalued. It was above where it should have been. And so in some cases, I think that it's like as if the events come to make the chart true. So that's just an interesting fact here. And you can see here we have a candle wick that goes all the way down to 3K, which was below our trend line. But will we see below 16K? Will we see a touch off on 10K? I mean, it depends a lot on how bad things get in the rest of the market, but I'm not that concerned. Obviously, I have some Bitcoin. I'm not selling it. And I'm not selling it for multiple reasons, and a lot of it is just because I believe that it's an ethical form of money. But it's not, I don't think that there's any realistic chance of it going down into like the 1K or something like that. I just don't see it in the cards. So anyway, not financial advice. You do you. For me, this is where I am. Thought I'd also look at Gold. So gold is a little bit important here. It tends to run away whenever there is a conflict. Gold tends to be considered a safe haven, and you can see that when in February there was the Russian invasion of Ukraine, gold did kind of pop at some point, and now it's starting to go back down. It's back at its pre-Russian invasion levels. What I think is significant about this, I think that Russia is being forced to sell gold, and there are few enough buyers that the potential buyers of gold are able to kind of hold the line here. However, I'm actually quite bullish on gold as a something to look into, and the reason is because of all of this volume that's just started to pop up here. And just to put this in perspective, we zoom out and we can look down to 2018, 2016. This volume is really unprecedented. I'll just put this into a month chart for a second, and so that you can see, like, okay, so 2007, 2013, 2013 was when, we really had the max volume of gold trade, but 22, it's actually beat 2013 in terms of gold going across the desk. So I think there's some interesting things that may happen in gold in the future. Traditionally, volume precedes price. So I think gold is one to keep an eye on, and it's one that's good to keep an eye on as a way to just get an idea of what is the market thinking right now. What's the market feeling? Where are we in terms of the greed and fear? Another one that is very important for what is the market thinking right now is the Federal Reserve balance sheet. So I like to just keep this open in a tab. Every Wednesday they report the amount of assets that they're holding on the balance sheet. And those assets are primarily US government debt, but they also, because of quantitative easing, they're holding some other kinds of debt, but they don't hold equity according to what they say. They don't hold any equity, they don't hold any stock. It's just debt in different forms. This also doesn't include the swap lines, so that is basically debt owed to them by foreign countries. But word on the street is that swap lines are worth something around 4 trillion. So according to them, their balance sheet is 8.9 trillion. And they've been managing to take it down a little bit. So we're going to just zoom right in on our more recent times. So here we go, 2021, 05, and then you can see that they were continuing to do quantitative easing. And then just as they said they would, around March 30th, it started to flatten off. And then now it's kind of going down a little bit. And if we zoom in really close, we can see that this was the peak in 03, 28, and now we're just starting to drop. They're managing to get it out. So when the Federal Reserve balance sheet is drawn back, that's when you're going to start to see blood in the streets in like the S&P 500, the NASDAQ, those kinds of things. And that also affects stuff like Bitcoin and the crypto market. So it's just good to have that in a tab and just keep an eye on it. Also wanted to show you a little bit about crude oil, and this is actually an interesting crude oil chart because this is showing the difference between the Indian crude oil exchange price and I believe that's Brent. So what is really neat about this is that there was a lot of talk about that India and China were buying Russian crude oil at deep discounts. Well, if they're doing that, then they're not putting it on their local exchange. So that crude oil may be being bought, but it's not affecting the exchange price of crude oil futures in India, because you can see that the Indian crude oil is pretty closely tracking Brent. So I just thought that was really interesting, that the hypothesis that a lot of this oil from Russia is being sold at these deep discounts, it seems that it's not really happening. It seems that if it's being sold, it's being sold at roughly the same price. Another one that is important to keep an eye on is wheat. Wheat has been a major issue recently with the commodity crisis. Obviously, the invasion of Ukraine, wheat hit an all-time high, or almost an all-time high. I'm going to zoom this out to a month again so that you can see. The all-time high was in 2008, and that same number, pretty much the same number, was just hit recently, and that caused a lot of fear in the markets, because obviously if people can't eat, then that's a huge problem. And fortunately, we've seen the wheat come back down. It peaked at oh, I can't see that, right at about 1356, but now it's at 846. So that's a welcome relief. But you zoom in and you can see that it's dropped right off. Now you see the same thing with wheat, and you see the same thing with copper. So copper, another one, it didn't really enjoy the major peak when the war kicked off, but it has started to drop off. And the word on the street is that there are people in the Federal Reserve who are interested in depressing commodities. It's word on the street. It's worth what you say it's worth. But I think that the conspiracy theory is that some of the very powerful, Federal Reserve connected banks are playing in the futures markets in order to cause these prices to artificially drop by just throwing cold water on anybody who wants to make a profit, making sure there's no bubble that emerges. So yeah, it's just that's an interesting thing, copper dropping off. What else is also interesting I see is that you've got wheat dropping off, copper dropping off, but crude oil is holding its own. I mean, there's a little bit of drop from so June 13th till July 1st. There's a bit of a drop, but but oil is really holding on, and the same thing is true of gold. Last one I'm gonna touch on is the euro dollar, and obviously I keep it open because I'm located in Europe, so it's interesting. I'm paid in dollars. I'm located in Europe, so that's very interesting information for me. However, it's also very interesting information to get a gauge on the health of the European economy. Now, there's a lot of speculation that the European economy is in trouble, that the future there's going to be a recession, especially with the fact that the gas supplies for natural gas are dwindling, and Russia is pretty much cut off Europe from supply of natural gas, and Europe doesn't have any other real sources of natural gas. They used to have a source coming from Algeria, but that pipeline has been shut down as well because of a skirmish between, or let's say a diplomatic spat between Morocco and Spain. And also there's diplomatic issues between Algeria and Morocco. And then there's also another gas pipe that comes through Turkey into Europe. But that pipe is it's coming from Azerbaijan, also not really supplying right now. So it seems that Russia has managed not only to shut off the supply of gas from themselves, obviously it's quite easy, but also they've managed to cause other countries to cease to supply gas to Europe. So this is going to be a big deal for Europe, and I think it's going to force the European economy the European countries to shut down their infrastructure, shut down their major industrial activity, shut down their factories in order to conserve electricity and gas, in order to be able to heat people's homes in the coming winter. They're trying to buy as much liquefied natural gas as they can, but the amount of gas that they need and the amount that they'll be able to buy are two different things. Also, of course, Germany's trying to make sure that they don't shut down any more nuclear power plants, and they're even reawakening coal power plants just to try to get as much electricity as possible. It's a bit of too little too late. And what we're seeing in this is a weakness in the euro economy, and as a result, a weakness in the euro dollar. So the current euro dollar is $1.04. So anyway, I just thought I'd try a different format. If you liked it, give me a thumbs up. Comment down below if you think I have any other ideas about it, and we'll catch you on the next one. Stay awesome.